also go to Sheng Yuan for moderating today's meeting, as well as to Vicky and Sandy for their dedicated assistance and arrangement leading up to the event. I also would like to take this opportunity to introduce our newest IR team member, Stephen Lee, who also serves as our ESG project manager. I believe with his support, we will able to enhance our responsiveness. Our agenda today will begin with brief introduction of those, followed by an update on current market situation and our product roadmap. We will then provide a report on our key financial figures for the first quarter before concluding with a QA section. As many of you may know, those specialized in design and manufacture the interconnection solution for server, PC, automotive, industrial, and medical. And according to Bishop and Associate, we rank worldwide number 4 in computing and peripherals. We are also worldwide top 3 CPU socket maker. Actually, based on the shipment, we are worldwide number 1 or number 2. This slide will cover the company profile, business outlook, and some financial data. As you can see, we've been including in Taiwan Nikkei 100, IT Index, TIP 30, and MSCI World Index. Two of our founders are brothers, and they are still running this company. Their family remains the biggest shareholder and holding more than 30% of the company. This gave us more strong stability, and we own over 4,000 patents worldwide, which is very crucial for us very crucial for our success in this industry. And our biggest strength is our in-house integration. We co-design the product with our customer to create more value. Once the design is finished, we handle everything ourselves, from molding, stamping, electroplating, and automatic assembly. This allows us to respond very quickly to any customer request. We also have reliability tests in each factory, which can not just help us lower the expense on product validation, but also time to market. We also have the certification for automotive, medical, and aerospace. This is our operation in China. We currently have more than 14,000 employees worldwide. The largest site is in Guangzhou with over 8,000 employees. In Suzhou, we have around 2,000 employees. We share the same factory with our sister company, Lintus. We also have another tooling center in Hunan with 1,200 employees there. We now have around 1,500 employees in Vietnam and keep increasing. We also have sales office in Singapore, India, Germany, and US to support our customers. This is our Vietnam factory, located in Taiping province, Taiping city. It's about 3 hours drive from Hanoi. This is a full function facility designed to meet all our customers' needs. To support our future growth, we are now planning to build a new dormitory. This will allow us to hire more people and expand our capacity in Vietnam. We not just design and fabricate the mold and assembly machine, but also the AOI camera and the robotic arm. This full control over our production technology is our key to high efficiency. Our sister company, Lintus, is an expert in high-speed cable design and manufacture. They provide a full range of solutions, including the optical, electrical, active and passive cables, Their technology is a great advantage for our group. For the business overview, in 2025, Lowe's reached a major milestone as our annual revenue surpassed $1 billion. In Q1, our server segment reached a milestone, accounting for over 50% of total revenue, with an 60% year-on-year growth. Despite a slight dip in PC-related shipment, our diversified portfolio in automotive, medical, and linter still performed better than expected. I will share more details about our outlook through 2027. Based on our latest data for the Q2, server shipments are growing well, up by about 15% quarter-on-quarter. Laptop are down 10% year-on-year, but we see a small 3% recovery in quarter-on-quarter. Desktop remain weak with a 20% year-on-year and a 12% quarter-on-quarter decline. Currently, PC market is under pressure. We expect it to stay slow until the memory supply improves. As server has become the key driver for us, based on the updated forecast we received from AMD, it indicates that an additional 15% or even higher volume growth in the second half compared to the first half 2026. And not just AMD, we also see strong growth from other server customers as we move toward 2027. And not just the volume growth, we are going to have the AMD Venus in the second half. And as AMD told us that Venus will ramp up very fast from now until 2027. As more Venus CPU enter the market, we will see more PCIe related product in the market as well. Other than that, we will start shipping SOCAMM in the second half as well. So looking forward, I'm very positive about 2027 because of two reasons. First, the increasing popularity of AMD Venus and the launch of Intel Oxygen, which will be our baseline. Second, I'm still expecting more product direct use for the AI platform in 2027. This will be a plus for our business. For the financial data, now I will walk you through our financial highlights for the first quarter of 2026. First, the revenue performance. We conclude Q1 2026 with a quarterly revenue of 9.332 billion NT dollars, representing our fourth consecutive quarter of growth and a new record high. This performance underscores the continued strength of our server segment, which now acts as our primary growth engine. Second, our gross margin for Q1 was 49.55%. While this is slight contraction compared to Q4 2025, this compression was primarily driven by higher raw material price. We anticipate that this cost headwind will persist into the second quarter. However, I also expect the margin can be improved in the second half, driven by the new product that I just mentioned. And despite the margin pressure, our operation margin still remain robust at 29.04%, and we deliver a net profit of 2.4 billion NT dollars, resulting in quarterly EPS 21.72 NT dollars. And our balance remains strong with a current ratio of 381% and a healthy debt ratio of only 19%, providing us with ample liquidity to fund our ongoing R&D and capacity expansion. In summary, while we navigate short-term commodity cycles, the fundamental demand for our core technology remains strong than ever. We are confident in our ability to deliver enhanced profitability as our new product roadmap scales in second quarter. This concludes my report. Now, let's begin with the QA section. We welcome your questions.
Thank you, Ray. So now let's begin for the Q&A session. So as I said earlier, there's two ways that you can ask questions. Either you can click the raise hand button or directly type the questions into the Q&A box. I think the Q&A box is actually within the more button. There's this actually function inside. So please use these two ways to ask the question. While we are still waiting the questions from the queue, I think I have two questions for Ray first. Ray, as you mentioned, you seem to turn very positive on the Rego server demand in the second half and also in the 2027. I wonder if there's this actually have any more color that you can share. For example, in terms of like the growth rate from second half, would it get into the 2027? Can you provide like more colors on that? Thank you.
Okay. As I just mentioned, AMD gave us because we just received the updated forecast from the AMD based on the data that based on the information forecast we received. The second half, the volume in the second half will continue to grow at least another 15%. And in next year, we see a robust concrete growth as well, not just from the AMD but also from other customers.
Thank you, Ray. So just want to clarify, when you mentioned 15%, you are talking about the second half year-on-year growth rate will be at least 15%.
No, compare the second half to the first half.
Okay, thank you.
Yeah.
So for my second questions, given that we are heading into the, I would say, the new era of the agentic AI, and I believe in the very near term, people are very positive on the new kind of the connectors that be used within the, no matter it's in the CPU server or the AI server. Can you also provide us some of updates on the newly invented of the products? For example, LGA connector, SOCAMM, would that say the CPO connector, etc. Thank you.
Okay. Yeah, we are going to see the SOCAMM in the second half, as I just mentioned. And for the LGA connector or the GPU, also known as the GPU socket, I would say we are still working on it, which means, but I don't have a timeline for that. Sam, I don't have a timeline for that at this moment, but we're still working on it. I would say the good news is the customer is still looking at it. So I hope that I can give you good news in a very short time. But right now, we are doing our best to kind of do the validation. And other than that, for the NPO, or someone called it a CPO socket. The NPO socket or CPO socket is used in between the substrate and OE engine. I mean, the substrate of the switch ASIC to the OE engine. So, as many of you may know, our sister company Lintus, they have a project from the C company, and uh, we are, I mean, those manufacture the socket for them, but the business owned by fully owned by the Lintus. So for the forecast, ASP, or even further business opportunity, I have no idea on that. So um, please go for Lintus for the details. And other than that, we also, I mean, for those, we also have another project that's related to the NPO socket or the CPO socket. But I'm sorry that at this moment, I am not able to give further comment on that. So that means we have two projects. One is from Lintus, the other one is from Lotus. Yeah.
Thank you, Ray. Very clear. I think within the queue, Irene Yan just raised the hands. I will give the right to the microphones to her first. Thank you. Irene, you can start to speaking now. Thank you.
Thanks. Can you hear me?
Yes, Irene.
Hi, Ray. This is Irene with Morgan Stanley. We saw that the first quarter gross margin was impacted by raw material price hikes. So, just wondering if there is any scope for proactive pricing adjustments with your customers to sort of mitigate the impact from the rising raw materials.
I would say it's not easy because most of our peers, our competitors are now raising up the price. So, and in the first quarter, we saw, one of our peers, they raise up the price, and that will result in we getting more shares from them, and the customer want us to keep our price unchanged. So I would say, as I just mentioned, yes, the cost headwind will persist in Q2, but however, just like I mentioned, I still believe that we have confidence that in the second half, the margin can be improved because of a new product launch.
Okay, so maybe just a follow-up from me. Is it fair to say that for the second quarter, gross margin might still be declining quarter-on-quarter or like flattish quarter-on-quarter, but heading into second half for the third quarter and fourth quarter, do you expect the gross margin to expand sequentially?
Um, I think I'm not able to answer your question at this moment because we are doing our best to, you know, do our best to do the cost down internally. So I hope that it works so that we are able to maintain or improve our gross margin in starting from second quarter. And looking forward, as I just mentioned, with more new product launch in second quarter, we we are able to improve the margin as well. Yeah.
Got it. Thank you, Ray. I will be back to the queue.
Thank you, Irene.
So within the chat box, we saw the first question from Eden. Could companies share more progress and roadmap related to CPO-related applications?
Okay. Um, I okay. For Linter's project, as I just mentioned, I have no idea about the details. So I will need you to go for Linter's. And for our project, um, I'm sorry that I'm not able to give further comment on that at this moment. But
Thank you.
as I know, yeah, sorry, additional information on that. As I know, the mass production should be in 2027.
Okay,
Yeah.
thank you, Ray. So for the next questions, the questions from the queue is that he wanted to know your margin improvement will primarily comes from new product upgrades. How about cost pass-through?
We are doing our best on that. We are doing our best to negotiate with our customer, but I would say it's not that easy. Yeah, we will do our best on that.
Thank you, Ray. So the next questions is what's the difference in content value and margin for Venus and Upstream compared to the previous generation?
Okay. I would say at least 15, I mean, the ASP will have another 15%, at least 15% more. Of course, it's highly related to the pin count increase. As you can see, SP7 pin count is over 7,500. And compared to SP5, only around 6,100. And SP5 already in the market for over 4 years. So yeah, I will expect the SP7 ASP will be higher.
Thank you, Ray. The next questions are, what's your server outlook for 2027 and any updates on Kyber rack qualifications? How would you compare with FIT for this project?
As far as I know, I mean, based on the forecast we received from AMD and the other customer, I mean, the server volume will continue to grow another at least 20% more in 2027. I would say that that would be a more conservative estimation at this as far as based on what I got. I will do my best to collect all the information to provide the update in the future. And for the Kyber, I think I need to. I don't have the full picture on that yet, and because for the project that we are working on, we are not so sure if it is for Kyber or not. So I think I'm not able to answer that question.
Thank you, Ray. So for the next questions, clients would like to know what is the difference between the CPO NPO project that Lintus is pursuing versus the one that Lotus is pursuing.
To answer the second question first, I would say different customer. Yeah, our customer is different from Lintus customer. So, and back to your first question, what's the difference between the CPO and NPO? I would say the CPO is pure optics. That means the signal from the switch ASIC is optical signal, and not electrical signal. But for the NPO, the signal from the ASIC switch ASIC is electrical signal. So there, for the electrical signal, they will have a socket in between to transmit the electrical signal from the substrate to the OE engine. So that's the biggest difference. And sorry, and as far as I know, the NPO will kind of I would say in the next maybe 3 to 5 years, I would say the NPO will still the main technology in the market.
Thank you, Ray. So for the next questions, it's from James Tai. Could you share whether there's any risk that raw material shortage in the second half of this year could lead Intel or AMD to delay the launch or ramping up of their new CPU platforms?
I think I'm not able to answer that question on behalf of our customers. So yeah, so sorry for that.
Okay. So the next one is in Chinese. The translation is that based on the regular server shipment forecast at around 15 to 20% for the whole market, the potential revenue growth rate for loads could be at 30% in terms of the revenue. How should we think of the latest of the ideas in terms of the server shipment growth rate and also the revenue growth rate?
Okay. I think beginning of this year, I gave this this is my estimation on the server volume growth is around 15 to 20%. Actually, back to then, I already factored in the shortage. I mean, already factored in the material shortage. So I still believe that 20% is still feasible for 2026. And based on that, um, as I just mentioned, in Q1, compared with the server segment growth 60% year on year. I mean server only, 60% year on year. And uh, yeah, so I will expect the growth to be will be good for us. That will be our key growth driver. I'm sorry that I'm not able to give a very specific number on the growth rate due to the regulation. Yeah.
Thank you, Ray. So the next questions, client would like to know how significant would this NPO project be for Lotus in terms of the revenue mix in a few years?
I hope that I can answer that question at this moment, but actually I'm not because I haven't seen the forecast and I have no idea how many will it be needed for us asset. So with no forecast visibility, I have and we haven't discussed on the price with our customer. So I think I'm not able to answer that question at this moment. But again, as I just mentioned, uh, the customer told us it should be step into mass production in 2027.
Okay, thank you, Ray. So the next questions client would like to know, could you remind us your latest view on the penetration for the AMD and Intel's platforms and also PCIe 6 for the 2026?
Okay. For the mainstream right now are still the E1 and SP5. Combined together, right now the penetration rate is around 75% to 80%. And last year number was 18%, 18% in Q1 and 70% in last Q4. So that means it continued to grow this year. And we already have the budgetary in the market. Right now, the penetration rate of the budgetary is around 15, and I believe that by the end of this year, it will be kind of a 20 to 30% for the budgetary. And for the Venus, based on the numbers, I think by the end of this year, the penetration rate will be around 20 to 25%. Yeah. So that's the penetration rate information.
Okay, thank you, Ray. So the next question is, what do you expect AMD and Intel to stop using socket for CPU? Oh, sorry. The question is, when do you expect AMD or Intel to stop using socket for CPUs? Could that potentially happen in next 5 years, given the performance cost of using socket?
You mean stop? You mean not to use a socket?
Yes. The client would like to know if there's a risk that Intel or AMD will stop using socket for CPU, even
I would
the
say, yeah. But yes, but please, go on. Okay. So, if this is okay, I I ever asked the same question to Intel AMD, and the answer is they will continue to use socket because for them they need to deal with different platform. Let me show you some pictures. Sorry, wait a moment. They need to deal with different form factors, and some of them are they need to deal with different models, and for them, it's not easy to control the ear rate. So for them, uh, uh, their business is sell the CPU, so they don't want to deal with the ear rate issue. And if they need to deal with the ear rate issue, then that means the fair rate cost will very high. So the answer from the Intel AMD is they will continue to use the socket. And right now, we are developing the socket for the next generation socket with pin count over 1,000 to 1,200. Yeah.
Thank you.
Yeah.
So
Thank
you are
you.
saying the 10,200.
Yeah.
Thank you. Yeah.
12,000. Sorry,
Yeah,
12,000.
12,000. Yeah, because
Yeah.
so most of the pin counts are already past more than 6,000 or 7,000 already. Yeah. So the next question's from Yvonne Chen. She want to know, is that fair to say the price for the socket on the new platforms in the second half of 2026 had already reflect the current material cost hike?
Yes, we will factor in the new material price on our new product.
So Ray said it's more from me. So for this question, I would like to do the follow-up because everybody is actually very keen to know more about the impact on the gross margin from the raw material hike. Can you remind us that the current of the raw material cost to the BOM cost ratio? And also, given that the gross margin is actually declined 2% quarter-over-quarter in first quarter, can we say that the majority of the decline, the 2%, are all coming from the raw material cost hike?
Majority of the margin drop is from the raw material price, raw material price hike. Um, uh, Also, because we are for some of the new product, we just start to max production, so the yield rate are not so good, so the cost are not so good as well. That's why we are now doing our best to improve the yield rate so that we are able to bring down the cost.
Thank you. And I have another follow-up is that when we compare your revenue mix from 4Q and first Q, this actually have a significant growth from 40-ish% to 50-ish%. So that means that in terms of the product mix for loads in first quarter, it should be favorable. So can we also say that the impact from the raw material hike in first quarter is actually bigger than 2 pp, 2 percentage point.
Mm, yes. Yes.
The last follow-up is on this question is that, as you also mentioned, the first quarter growth rate for the server segment is actually at around 60%, 60. If we're actually adding the regular server shipment growth rate plus the ASP hike, I believe the underlying growth should be still less than 60%. Can you explain the gap between the underlying growth to this 60%? Is there actually having some of the non-organic growth rate that's contribute to loads in first quarter?
I would say not just the volume growth, but also from the ASP growth. The ASP growth I would say from the product mix. As I just mentioned, the average penetration rate last year was around 50%. And I mean for the Eagle Stream, the E1 socket and SP5, uh, and the related product as well. But for this year, it's starting from 70% to 75% in Q1. So that helped us to improve. I mean, that means the ASP growth. We have some growth is contributed from the ASP, not just volume as well.
Okay, thank you.
Yeah.
Right. The next question from the chat box, from Aiden again. Could you share what components is in shortage now, and do you think it is manageable for potential business upside?
I would say um I would say it's more like demand is stronger than supply. I won't say it's shortage because the demand is so strong and it's bigger than the supply. If you look at the AMD supply, actually grow a lot, but I was again the demand is so strong, so that they are not. I mean, most of the suppliers are not able to fulfill the customer demand. So that's the current situation, and um, not just the CPU, but also the memory and maybe the PCB right now. Even some of the component are we know that we heard that there is some kind of a random shortage, not just a certain material, but sometimes passive components, some other active component, or even some mechanical parts. Yeah.
Thank you, Ray. So for the next question, what do you expect AI percentage mix of revenue in 2026 and 2027 based on the AI project progress? How confident are you in those forecasts?
I think I'm not able to give a very specific number due to the regulation, but as I just mentioned, I still I am expecting we have more um, product direct use for the AI platform in 2027, and that's still the case. Uh, as I just mentioned, some of them I'm not. I don't know the forecast. We haven't got the final ASP, so I would say at this moment I'm not able to give up. Sorry. I'm not
Okay.
able to give a very specific number on the contribution.
Okay, thank you, Ray. So for the next question, client would like to know any breakdown of the Venus penetration rate between low end and high end.
This year, majority of the advantage will still the SP7, and I think we are able to see more SPA starting from 2027, or yeah, starting from 2027. Yeah.
Thank you, Ray. The next question on the socket question, why doesn't other CPU use socket? For example, AWS Graviton. Why is EO less of an issue for them? And why does GPU not use socket?
Okay. First question, I ever asked this question to our customer, and the answer I got is that because they only have few SKU, and uh, if they are able so they are able to control the E array in a acceptable level, but different from for the Intel and AMD, the situation is totally different. They are not able. They need to deal with different customer and the different SKU. That means the situation is more complicated for them, for Intel and AMD, so that they intend to use a socket to, they don't want to deal with the E array issue. So that will become the socket supplier to overcome the E array issue. And for Intel and AMD, their core business is to sell the CPU, not to deal with the quality or the E array. Yeah. And for the second question, as I just mentioned, okay, for other than NVIDIA, they are using this kind of connector, mass link connector. It's more like a boat-to-boat connector. One on the motherboard, the other one on the GPU side. So it's more like a boat-to-boat connector. It's not a socket right now. And right now we are doing our best to promote our solution, but currently Molex and TE are the main supplier for this kind of connector. And as I just mentioned, we are still working on the LGA connector, and customers are still looking at it. That also replies that they want to use it, but before they use it, we need to prove that our socket can solve their problem first. Yeah.
Thank you, Ray. So next questions. The client would like to know whether a socket is on
Oh,
air.
sorry. Yes.
Okay, so the client would like to know whether socket are used in NVIDIA CPU standalone rack. Which products or component inside those rack would use sockets? So to summarize, I think the client would like to know whether the socket are actually being used within the NVIDIA's CPU rack and then yep, I think that's a question.
Uh, uh, okay, for the CPU, I would say, as you can see, there's no space for a socket. Is the design too tight? There is no space for, for the CPU, there is no space for a socket. But for the DDR, yes, they are going to use the SOCAMM. For the GPU, we are doing our best to convince them our solution is workable. I hope that it will come true in the near future.
Thank you, Ray. The next question, do you expect the full year gross margin can achieve at least flat year-on-year as your new product mass production from second half?
That will all depending on the penetration rate of those new product, not just the socket, but also the PCIe. And as you may know, the PCIe come with the socket, so that will all depend on the penetration rate in the second half. Yeah. And again, other than counting on the new product penetration, we are still doing our best to bring down the cost to do our best to do some cost reduction. Yeah, that's what we are doing right now.
Thank you. There's another question similar to gross margin. The client would like to know, is the GP margin that slots can achieve in second half similar to full quarter 2025 levels?
I can only answer that we are doing our best. Yeah.
There's two clients are raising their hands. I will add to go with the online question first. Albert, I will unmute you now, and please go ahead.
Thank you, Jim. Thank you, Ray, for
Hi,
taking my
Albert.
question. Sorry, I would like to ask more the margin side, since it's probably the most focus in the code. If I look at the raw material cost trend, it has come up a lot in fourth quarter, but it come down in first quarter. And I know we use FIFO, right? So the weighted average should reflect later. So my question is all this raw material cost hike fully reflected in first quarter gross margin, or is cost of goods sold cost structure is still getting more unfavorable into second quarter?
Yes, I would say we still have some pressure on the cost headwind will persist in the second quarter as well. And yes.
Yeah, please go ahead.
No. And just like what I mentioned, not just the raw material, but also some new product year rate are not so good. So that's why we are doing our best to improve the year rate. So we are now targeting to bring down the cost as soon as we can.
Understood. Okay, so my math is for raw material like copper, plastic, gold, it comprise 15% of cost of goods sold respectively, right? And from say third quarter to fourth quarter in the past, say 1 quarter, probably we already saw 30%, 40% of increase. So 40% of cost of goods sold have like 15%, have like say 30% kind of increase, and cost of goods sold is half of our revenue. So that means 6% margin impact. And you already have like 2 to 3% margin impact in first quarter. So supposedly in second quarter, we will have another 2 to 3% margin impact. But previously you mentioned that every quarter you will say typically you will adjust the price down 2 to 3%, but you stop doing that because raw material cost increased. So if my math is right, wouldn't this cost increase be more than offset by your fixed pricing strategy in second quarter?
You mean you will be offset by stopping pricing down?
Because you used to say the product price may see 2 to 3%
Yes.
adjustment down every quarter,
Yes.
right? And you
Yes.
stop doing that because the raw material is increasing. So my question is, if we stop doing that in second quarter, then suppose we should get 2 to 3% margin accretive from that help. And wouldn't that be more than offset to the cost of goods sold increase?
I would say I hope this is still the case, but I hope that is still the case for the second quarter and for the rest of the quarters in 2026. And I would say At this moment, I still see some pressure in Q2, but yeah, we are doing our best to mitigate the cost increasing, and we see some opportunity to kind of improve the margin by all the new product or by all the new product in the coming quarters. Yeah.
Understood. Rick, could you help us understand more about the pricing dynamics here? Because I think after CNY, you talk about the customer increase the order, so there's even like supply tightness for socket itself, not CPU itself, but also socket itself. So I would suppose the pricing dynamics should be more favorable for socket vendor, right? Since there are only like 2, 3 vendors in the market. So why couldn't we just price up to reflect the cost hike? And
Because
yeah,
yeah,
go ahead.
because
Yeah.
no, only the the supplier that price up, they lose their share. So that's why we are not doing so. And as based on our experience, the cost impact will last kind of a 3 quarters, most likely 3 quarters. Maybe I mean based on our experience, it's mostly like that. So, considering about long-term relationship with our customer, we will, more like to negotiate with our customer instead of just raise up the price just like that. So I hope that this time, I mean, this year is still the case. In maybe in the in the near future, the cost will I mean the raw material cost will bring down a little bit, so we can improve our margin.
Understood. And I think previously you guided the full year server revenue to be up like 30%, and you mentioned that in first quarter, if I didn't hear you wrong, server itself already grew like 60%, right? So if first quarter is so strong, any update on the full year server revenue guidance? And within the server space, any colors on the PCIe revenue growth and market share? Thank you.
Yeah. I would say because let me check. Last Q1 server only took around 20+%. But so that's why the server grow a lot year on year in Q1. But server last year, I mean, fourth quarter last year, the server already took around over 40%. So I think the growth year on year, I mean, every quarter in the coming quarters, year on year growth uh, will be less compared to Q1 because the the basic is different, totally different. And sorry, your second question?
Within server, we were working very hard on PCIe, right?
Yes,
And
yes.
how much is say PCIe revenue growth outlook, and any colors on the new PCIe generation for our market share?
Okay. Last year, CPU socket is still the biggest one in the server segment, and second followed by the DDR and PCIe. And again, I just like what I ever mentioned, my target is to have the PCIe bigger than DDR this year. That's still my target, and that means for the market share wise, for the PCIe connector, last year we have around 10% market share, and this year my target is still 15% or even higher market share on PCI related connector. For the cable, last year is less than 3%, and this year, I think we are addressing on the 3 to 5% market share. And other than market share, the market TAM is increasing. So taking more market share plus the bigger market TAM, so the actual growth will be higher than the market share growth.
Understood. That's very clear. Thank you, Ray. I'll go back
Yeah.
to the queue.
Thank you. Thank you,
So
Evan.
next questions will come from Angela. Angela,
Hi,
please go ahead.
Angela.
Hi, Ray. Thanks for taking my questions. I got the follow-up question first. Yes, actually, you delivered the server sales growth over 60% in the first quarter, and you just mentioned that the penetration of the new CPU platform actually increased from 18% in first quarter last year to 70% at the end of last year. So can you give us some ideas about the 60% growth for the first quarter? It should be main from the ASP expansion, I guess. But what can you provide us that how much from the ASP expansion and how much from the shipments growth for the first quarter? That's my first question.
I must say that I haven't done the calculation, but I think should be some half. Half of the contribution from the ASP, half of the contribution from the volume growth.
Okay. I think okay. And then do you think this kind of ASP expansion can offset the cost increase? I mean, better product mix in the second quarter, I think it will continue. And although the server growth probably will slow down from the first quarter level, however, I think the server trend should be better from your side. So do you think that will see the better product mix to offset the cost pressure and make the second quarter gross margin more stable, not for so much like first quarter?
Yes, that's what I expecting. As I just mentioned, the second half compared to the first half, based on the AMD forecast, increase another 15% more. And not just volume growth, but also we are able to see a new product in the second half. So with new product, with higher volume of the socket, I hope that I still anticipate that our margin can be improved in the second half.
Okay, so still need to wait until second half, not stable from the second quarter. Can we expect stable in the second quarter?
Honestly, I don't think so because oil price just shoot up in March. So most of the cost impact from the plastic, because the oil price will impact the plastic price. So most of the price impact on the plastic will happen in second quarter.
Okay, yeah, understood. Okay, and another question regarding to the first quarter, that's the OPEX. This is 1.9 billion NT dollars. Can you give us some ideas about the OPEX trend in the coming quarters or the whole years?
Okay, as we are expanding our business, I deep dive into the OPEX. I would say our expense on we are hiring more people, and most of the expense is because we're hiring more people. And another one is we are developing more and more product. So I would say it's more like the R&D expense. So I don't expect that it will drop, but we will do our best to kind of slow to manage it in a certain level. So I can how about I answer your question this way? I hope that we can maintain our OP margin in the level in Q1 and in between the Q1 and Q4 last year.
Oh, okay, the whole year target.
Yeah, yes.
Okay, got it. One more question is that I saw the server sales. This year, it seems that you revised up the sales target to 40% above. Just wondering. I mean, are you seeing better demand at this moment? So that's why you revise out, or any other reasons behind this? And also would like to know. So far the CPU supply seems quite challenging or tightness. So, do you consider the CPU supply demand gap, and what this gap is looking like at this moment, or will the situation become better, or maybe will worsen? Thank you.
Okay. For the first question, are you saying this?
Yeah.
According to the regulation, I'm not able to give a specific number. Yes, I would say the previous forecast or estimation I gave is more conservative estimation. Yeah. And based on the result of Q1, yes, I will say it will be better than what I expected in early this year. And to answer your second question, as I just mentioned, based on the forecast from the AMD, they are increasing their supply in the second half. But again, it's not a supply issue. The shortage is causing by the demand, not the supply. The supply is doing actually all the supply are doing our best to meet the customer demand, but the demand increased a lot. So that's why I say we see very concrete growth in 2027.
Okay. You mean, yeah, I got your ideas. You say that basically this target, you're maybe better than expected outlook, is already factored in the supply demand situation. Basically, demand is strong, but supply just catch up. But supply will be increased from previous level because some CPU makers increase their supply volume. So that will be better than the gap. Will be better in the gap between supply and demand.
Yes.
Okay.
But
got it.
I would say the supply is still not able to catch up with the demand. Yeah. That will be the issue. Yeah.
Okay, so do you expect this kind of situation? I mean, the strong general server outlook can continue into the next year. I mean, like if you deliver like a 13-40% year-on-year growth this year, for the next year, you basically have a high pin count penetration higher. Do you expect that this high growth, can continue into next year?
Okay. Demand-wise, I would say that's not just the AMD, but also other server customer all gave us, I would say, very clear and positive forecast in 2027. And to answer your second question for the pin count, I would say just like what AMD told us, the SP7 will ramp up very fast, and if we are able to see the auction in next year, so we still expect the average pin count will increase from this year, around 6,000 plus to over 7,000 plus next year.
Okay. Okay, the last question is that you just say that some gross margin impact in the first quarter from yield rate problem. Can we know that which kind of yield rate problem that you suffer, and do you think that it can be solved in the near term, like second quarter? Thank you.
Okay, it's not just one product, it's some of the product, because we introduced a lot of a new product in the first quarter, something like including cable, not just the cable, but also other connectors as well. So the yield rate was not so good, but I think we are able to improve the yield rate in the near term. So I hope that it will help improving our gross margin.
Okay, thank you. That's all my question. Thank you.
Yeah, thank you, Angela.
Thank you, Angela. Thank you, Ray. So I think due to the time constraint, we probably have to conclude the call here. So there's still a few of the questions that are able to answered from today's result call. I think for those of investors probably can directly send a message to Ray. I hope that Ray would able to answer for those questions. Yep.
I will do my best to reply all the questions as soon as I can. Yeah, thank you.
Yeah, thank you, Ray. So before we conclude the call, do you have any closing remark?
As I just mentioned, I still very very positive on the coming quarters. So because of the strong demand. So yeah, so I hope that we are able to improve our gross margin. Yes, we do see the headwind in second quarter, but I still expect in the second half it can be improved. Yeah, thank you.
Thank you, Ray. Then we will conclude the call here. Thanks everyone to join the first quarter result call for the loads today, and hope to see you guys soon. Thank you, and thanks Ray for joining with us. Thank you.
Thank you very much. Bye bye.